23rd December, Friday, MEO with Cal once again. Now, seriously, today this video is really a must watch and you really have to watch it all the way to the end, alright? Now, this is going to be at least a 30 minutes video. I'm going to lie about it because there's so much content to share with you, alright? To me itself, right, the current situation is that there could be a potential black swan event. I'm not kidding you. I know that you don't see, no one says about it, but I feel that it's coming. And this time, if it comes, the market will break down pretty badly. And I'll explain to you more in details along the way. So stay tuned to this video today. But before anything else itself, make sure that you do your risk assessment. Whatever I share today, just use it as a reference guide. And if things really develop according to plan, then try to maximize your gain, all right? And go slow if you're going to do some bottom buying. All right, thank you, Ames, for the kind sponsorship too. So first of all, what happened last night? Now, the last night, the Dow Jones was down by almost 700 points. No, sorry, 800 points at one stage. Yes, indeed. Many of my students actually profited from it. We called for sell and we actually made money on that. And the thing is this closing down 300 points is because the market recovered toward the end. Now, look across the board. Microsoft was down by 2.5%. By the end of the day, Google down by 2%, Apple by 2.34%. Wait a minute. Apple was up right just yesterday. Exactly my point. Something is just not right. And the way they're selling towards a regular, traditional, seasonal Christmas rally that usually happen is not happening. Things is not good. So, of course, there are reasons for that. The mainstream media say that it was because the GDP numbers was 3.2%. Hey, come on, it's a good number, right? Why would you be unhappy with a good number? Well, the Federal Reserve really wanted the whole economy to slow down. So, which means that now they are saying that because if the GDP is still doing good, that means the inflation will still be high. So, whatever they have been doing to really to deflate this inflation may not happen. So you see, when the market will sell, right, it will tell you everything. So now the initial jobless claim, now it came out to be 216, not higher but lower. So again, that actually tells you that people are doing fine. So that is one reason why that Federal Reserve may really need to hike rate even more so that they can actually really combat inflation. So that is one reason why the market sold off. But of course, there's another reason. Is because this guy, David Tepper. Now, David Tepper, he is a billionaire, all right, a hedge fund manager. He basically is an optimist, but yet now he's leaning short on stocks, okay? Now, we all know that David is a very good investor, and most of the time, he do pretty well. With $18.5 billion, he's really good. So now the thing is this, if he is calling for sell, that is why the market is actually panicking right now. And this is something that you must take note, because if you look back into his history, most of the time when you call for sell, the market do actually come off. So yesterday, we talked about Tesla, and I've been telling you guys that Tesla, what will happen, and I said that it'll go down to 120. Remember that? Indeed. And of course, Tesla really came down, go below 138 and went down to 125 for the closing. And it came with huge volume, guys. The volume is very big. So there's only one answer to that. Is that because someone must have tripped a cut loss button somewhere. Okay? Likelihood this is because of a cut loss and then causes the volume to shoot up. And you can see there was no holding back. The market just keep on selling. Now, even a traditional indicator itself, right, is actually, you know, at the lower end of this, and yet there's no technical recovery. This is a really bad thing, and I think that this will be bad because there are concerning factor here. Now, we all know that now Elon Musk say he will not sell any more Tesla stock for the next 2 years, okay? Finally, he said this, but even he said that, the market is not reacting. And you must understand that now the Tesla short sellers are up more than $15 billion according to OTAX, that making Tesla the most profitable short so far for 2022. Don't you realize that it's going back to what happened in 2016 itself? So this is really crazy. And this is really bad. This is really bad for a company that is supposed to be the top company in the world. And now this company is in such a bad place. Okay? The thing is this, if you look even deeper, we have even more trouble. Let's take a look. The thing is this, the retailers have been buying. Oh my God, the retailers have been buying. And they've been buying Tesla. Look at it. They don't buy any more Apple. Thus, you can see that they are actually reducing their purchase on this Apple, but they'll be increasing the buy on Tesla. So when the Tesla is going down, as you can see, the retail keep on buying. So don't you think that this is something that we all know, that when retails are buying something, that the prices keep on going down itself? So you cannot imagine one day if the price plunge, okay, due to some people selling, some entities selling, some margin call, you can expect things to get very, very ugly. And this is why I'm very, very concerned right now with this Tesla stock. And if you actually remember, right, Elon Musk have been pretty concerned with the thing called recession, okay? Very concerned for this. And there's a reason for that. He basically has said that, right, he will not sell anymore because he's just afraid that things may go wrong. And he feels that now it's a long overdue economic recession that's not here yet. Okay, it's not here yet since 2009. So in fact, he's pretty paranoid right now because he has went through 2 intense recession over the last 2 years, last 5-6 years. All right, he knows that things can get very, very scary, and that's the reason why he is actually pretty concerned of the recession. So let me share with you something that I mentioned last night, okay, yesterday during my video. So I actually, towards the end of the video, towards the end itself, I actually said something. I'll bring it up for you right now. I want you to hear this again. If you missed it, hear this again, all right? Important is I'll share this before we end this session. I felt that there's something that's brewing right now, and it's unseen. But if you've been looking and hearing my MEO, right, it just tells me that a black swan is just around the corner. Tomorrow MEO itself will be very exciting. I hope that you watch it. All right. This is Cal signing off. Have a great. So if you notice on the top left corner of the screen, the Dow Jones trading was 33,415. All right. Last night the Dow Jones went down all the way to 32,500. So which means the market dropped by 900 points. Oh gosh, 900 points after I post this video. So that is the reason why I think that this is really the starting point, and you need to be very, very careful on this, okay? You need to be very, very careful on this. Because what's a black swan event? Let me explain this to you right now. Now, a black swan event, as you can see on the screen, okay, let me just check this out. All right, it's actually a severe repercussion of events. Right, it cannot be predicted well in advance. Of course, you can feel it, but you can't predict it when. And it's considered a catastrophic event that have a high level impact on the global economy. All the science, logic, astrology get fail in predicting such event. So obviously, I'm probably one of that. All right, and the thing is this, all strategic planners and thinkers do plan or predict the occurrence of such event. So which means that we have to prepare for this. So now, the question is, where would it come from? What would it be? I wouldn't know, but there's something that I want to share with you over here. Oops, there's some PowerPoint issue. Let me just settle this. Give me a moment. All right, here we go. All right, if you look at it right now on your screen, you can see that, right, this is from 1987, or the Black Swan event. And you can see most of the time, the downside potential is about 30%, okay, 30 to 40%. The latest one was the COVID, where the market down by 30%. And of course, we have one back in the GFC time, where the market down by 56%. And of course, we have the 911, where the market dropped quite badly, about nearly 30%. And of course, we have our Black Friday Monday, which is down by 20%. So if you look at it right now, right, if you look at it further and deeper, since 1929 all the way, you can see that, right, when a Black Swan event actually really happened, it can be really bad. And it's actually quite regular. So that's why I feel that something is not right when actually I see this right now. Take a look. This is the CBOE equity put and call ratio versus the S&P 500. And you can see that since 1998, okay, whenever this index itself, right, is actually around this area, it's about 1.2 to 1.4, okay. During this area, you can see that we can see the recession is always very nearby. All right, can you see that? Okay. But now we have no recession, and yet we are 2.03. Oh gosh, this is so huge. That means that for every one call option, there's 2 put options in the market. And of course, everybody take a look. When those things happen, the market really comes off. Okay. So the question is, we have not seen recession yet, at least not the official word, but the market itself, right, is not really plunging. Okay, as compared to all this, where the market really plunge in a sharp angle, we are not there yet. And yet we have the huge amount of people doing this. So it's either the boys going to get it totally wrong, or the boys has already know that something big is going to happen and they are all laying their bets on this while the retailers are buying. This is the scary part that I'm very, very worried, and you must be worried too. So if you look at the technical side yesterday, the Dow Jones came down, touches my Fibonacci, rebounded. Now do note this is a very important MA. This MA itself is 32,480. The market must stay above 32,480 by hook or by crook. Because if not itself, right, the next wave of selling will bring it down below 32,000, and the huge one will be all the way down to about 30,500 area. And that is something that will freak a lot of people out, because a lot of people have been buying stocks over the last few weeks and they were all expecting the price to go higher, but now they are in a very, very dangerous position. Okay, and of course, if you look at the S&P 500, you can see that it's really holding the gap area here, and that's 38.22. Okay, anytime if the market loses this support level, oh sorry, 38.11. Sorry, my bad. It should be 11. Okay, let me just correct this. Apology. 38.11. If the market failed to stay above 38.11, that means that the market can come down all the way here itself to 3,550. Of course, Mike Wilson from Morgan Stanley is actually looking at much lower level. The worst case scenario is 3,000. Okay, I don't think we'll go there, but based on what I'm seeing right now, 3,550 should be next. All right, and of course, the Nasdaq is the most worry index, because it's down more than 30% at the moment, and it's just very close to the low that happened early this year. In the mid-September. So all this information tells me that, right, something bad is just lining up, and things can get very, very scary, and you should be very careful on this. All right, so let's take a look over here. Oops, I think there's another PowerPoint slip here itself. Apology on that. I'm rushing away for this thing, so I didn't have time to go and double check. I apologize on this. Now, this is the VIX itself, okay? Take a look at VIX. Now, the VIX yesterday shot up, okay, when the Dow was down by 900 points. And of course, when the Dow recovered a bit, so did the VIX pulls back. But when I look at this chart itself, right, straight away, I find it very familiar. And I look back here, you can take a look right now, it looks identical. Don't you feel that way? The way it came off, you can see that it's identical, okay? The number itself is almost the same number, and then we have a pump up over here, which also looks pretty similar in my opinion. And then after that, we have a very strong recovery, which is something like this. Okay, so I feel that things may actually repeat, and of course, if it repeats, means things can get ugly. And what do we mean by that? Now, this period of time was between the April month to the May month, when this thing happened. So if I look back at the screen right now at the chart, when it was April month to May month early this year, the Dow Jones was trading at 35,400. But the lowest point it went down was about 30,630. So which means that the market lost nearly 5,000 points in a span of less than 23 trading days. And that was why the VIX shot up like this. So you'd ask me, it's all right. If nothing bad happened, fine. But if something really bad happened, we can actually see a similar pattern here right now, and that is a 5,000 point whopper, and this is going to break the market. So traders, you need to be very careful if this thing actually repeats. All right, this is kind of scary though. All right, so of course the federal dot plot is one of the reasons now, because now more and more people are still watching the interest rate to go at least to 5.5%. Okay, you can see that most of the Fed officials are looking at 5.5 at least for 2023. And if let's say today or the next few months, the inflation is going to go higher again, who knows? This whole thing may revise to even 6%. And if that really happened, I can tell you this, the market will really crack. So that is why there's a lot of people getting very worried right now, and they're thinking what to do. All right, let me show you another video here itself, right, from this guy who's a regular in CNBC, talking about what is it may happen to the market. Let's watch what he has to say.
While I'm talking, I might as well ask you a question. I'm just curious what you thought of Tepper and his view, clearly rooted in the Fed and other central banks and their plans, but obviously extending to the fact that he does not seem very constructive on our equity markets.
Yeah, no, it was, and I think he realized it was a kind of a hot potato, because Becky had to push him a little bit. He kept saying, well, I'm not like long-term investors. I'm a hedge fund guy. And then finally she pushed him a little bit about which side would you be leaning to, and he said, well, I'd probably have to be leaning toward the short side rather than being long, and for very good reasons. I mean, his point about Christine Lagarde is well taken, but I don't know why her crystal ball would be a great deal clearer than anybody else's, but she...
All right, so this guy, right, UBS guy, Kashin, he is actually Arthur, right? He is actually being asked an interview on what he think about what David Tepper said, and also he also feel that if the thing is this, okay, if the S&P 500 breaks below 3,800, things can get very scary, and that is the reason why I'm going to share with you now what is the potential of this happening. Now, according to Goldman Sachs, Monday was the start of the final blackout window. Blackout means no more, okay? Basically, no more buying of shares back, okay? And that as of this 18th of December, about 30% of them, because S&P 500 got 500 companies, right? So now we have 180 companies not doing anymore, and by the end of next week, it'll be at least 300 companies. So which means that, right, more and more company will do the blackout. Okay, no more buying of their own shares for a period of time. So this is actually pretty bad, because if they are going to do their blackout period, that means that there'll be lesser chance of the stock market going higher, because the companies are buying back their shares. And if the selling continue and there's no buyback, right, there's no support, things can get very, very bad. And that's the reason why I'm kind of worried, especially for next week itself. Kind of worried, guys. This is not going to be no joking matter. That's the reason why I'm telling you this video is going to be damn powerful. Alright, and of course, at the same time, it's been a while. The QQQ short interest is actually also at the high time. Look at it. Now, there were a few periods whereby the QQQ shorts, right? QQQ is an ETF that tracks the NASDAQ 100 index. It's 102 holdings, and it's fourth most popular ETF in the world, okay? So a lot of people actually use this for trading purposes, and the thing is this, look at it right now. In 2014 and 2018, we all know that after that, the NASDAQ actually came off pretty badly. So what do you think is going to happen soon? And that is why, again, I'm very worried, especially for next week. And be honest with you, one of the things that I think will happen based on the potential black swan is this. Now, if you cannot recall, let me bring back you into time. Right, remember when the first time COVID-19 really was, maybe not made known to the world, it was in 2019, and it was in Hubei province of China, apparently, okay? So we all know that after that, basically the virus spread to more than 90 countries in just 2 months, and things got terrible. Now, of course, you may say, well, we are already over COVID. Yes, I understand. But if you can just think back for a moment now, what's happening now in China? This is crazy, because when I was covering this itself, right, many people think that I'm just making it up. But I tell you that because I have relatives in China, I know news from there, and this is getting very scary. Look at it. People are now really looking to get themselves, getting all the medication for themselves, because the virus is spreading very rapidly across entire China, all right? And you can see that a lot of dead bodies, no kidding, and people who have passed on, even in various schools as well, right, all the older generation of teachers and working staff all have submitted, okay, the family members submitted their death reports. It's basically everywhere right now. And the thing is this, okay, this is scary, because they have run out of burners and places to store the dead bodies, or to at least fridge them for time being until you can actually burn the bodies up. So the point is this. Alright, all these are actually happening, and people actually say that I'm making this up. So what I do is this, I give you straight from it itself. It's there from here, Channel News Asia. Hear it for yourself, and you see what is being mentioned, okay?
The country is experiencing at least 1 million infections and 5,000 deaths every day. The numbers come from research firm Airfinity, which has been tracking the pandemic since it first emerged. Some Chinese cities have been handing out free anti-fever drugs as waves of infections sweep through hospitals. The country's abrupt U-turn in its zero-COVID policy earlier this month has caught the healthcare system unprepared. And now medical workers are bracing for a battle.
Patients crowd the corridors of Beijing's Chaoyang Hospital. The facility is seeing around 400 patients daily, 10 times more than the beginning of this month. Many of them are elderly with fever symptoms on top of pre-existing conditions.
Alright, so you can hear it for yourself. Potentially 5,000 deaths per day. My God, this is really incredible. So the thing is this, think about this for a moment, all right? China is the biggest exporter to the entire world, and if they are down, what will happen to the entire supply chain? So let me bring you back again to pre-COVID time once again. Now, being pre-COVID time, things were okay during Christmas period. Everybody were happy in 2019, and things continue to go up. Then when the first strain happened, we have a bit of pullback, but the market didn't take it and continue to go to new all-time high. Then, incredibly, by about 19th February, which is a Chinese New Year period, when China released news that a lot of people, getting the virus, all right, from Wuhan, right, apparently the market just collapsed, okay? And the time itself, the VIX was trading at about only 15, okay? Today, the VIX is at 28 right now for the S&P 500 back then. And versus now, okay? So this is something that you must remember. Why? Because if you look back further now, this is what happened to China, Shanghai index, right? Back then, that was period before the market. I mean, as you can see that the China market was recovering, and then that was where 15th January it started to close below the MA 200 for the first time. And that was the time it broke. And of course, you will notice that by 2 days later, that's where the US stock market collapsed. All right. So that is when the China market down, substantially itself from 1575 all the way it dropped down to 13. So it's down by more than 15% in just about probably 6 to 7 days. So if they didn't do it back here in the market, right, that means that it could be the same thing for the US market. So you can also see back then, the VIX was actually much lower. It was, the time itself was about maybe 21, but then today now it's at 28. Okay, so watch out for this area here, whereby the market actually, you can see on the screen right now, the market actually touched the MA 200, consolidated here, and then when it closed below for the first time, that was where things really get very bad, right? Okay. So now I want to show you this pretty scary. Brace yourself. Take a look. The same thing now. I put it now. You can see that the market did the same thing again on MA 200, and now it's closed below it. So the question mark is, where could it be going? So if you ask me, I think that I will choose this side because I believe that the things will get worse. Okay, things will get worse, and probably, and once this thing is so bad, think about Apple. Think of the production of Tesla. All these companies, they won't be able to do what they're supposed to do right now. So what will happen to the global production? I mean, this is really no-brainer. It can be done and it can be seen. But because the stock market now is holding it so tightly because they just don't want it to happen, but you must understand, the moment they cannot hold it anymore, bang, things will get very, very ugly. So that's why I say that it's a potential black swan event. Now, I'm not trying to force one here, but I'm just telling you that it is no-brainer that something could be coming up. And once China really declare any form of emergency, things will get even worse. All right, that's the reason why today's video itself is so powerful and so important. All right, guys. So look at the chart, and we can see more in effect of this. Take a look. This is the Dow Jones chart for you right now. The Dow Jones chart yesterday comes down perfectly again, stopping at the level that I mentioned, 32,553. This is the second time the market did it and recover. So now my KFC level is still there at 33,031. The market is trying to hold above it right now. But if again, it do come down, it will come back down again to this 32,553. But if things get uglier, things can get really nasty. Because if you look at the 90%, the 5% chart, we can see right here now there is the support, as you must take note, that is 32,334. And if the market failed to cross back above 33,258, that is the 90% mark, it should be coming down to the 31,410. Now don't forget, the bear territory is still at 29,562. So from where we are right now to this point here itself, is about 3,500 points, okay? 3,500 points. Do you think it's possible? to me, it is really, really possible. And of course, at the moment now, you can see China is really resisted at the technical level at 13,000, the psychological level, very, very heavily. And this is the CFD numbers. So if the market failed to stay above the MA 200 and close below the MA 30, I think this is going to be bad. And of course, with Chinese New Year coming in next month early, I think things can get very, very wrong. So I just feel that it's going to happen, guys, after Christmas. You just have to be very, very careful. All right. Of course, I can be wrong, but I just want you to be careful. Okay. All right, I just want you to be very, very careful on this. Let's look at the Dow Jones now. The Dow Jones created a new BNB, it's a new CCYR, and in fact, this is called single yellow to us in TWB. And normally with single yellow, the next day, if it's red bar, that means that there could be more selling to come. With KSI and KRW both are red, that means that the market must really host 32,972 really. Anything below it itself, the next number will be 32,549, the next KCB, which is a strong support. And of course, this is also almost the same level as the BNB support level. And let me just redraw this for us. Okay, this is the RL, the resistance level, and this will be your support level at the same time too. And change the color a little bit so that it can be clearer for everybody to take a look. So if the market really breaks below 32,550, the very clear support, then the market can come down all the way to 31,660 level. And let's look at the S&P 500. S&P 500, as you can see on screen right now, it is still red bar, but a new BNB is formed. And of course, if the market stays below MLP of 38.55, it can come back down all the way to 37.51. The only thing is that the KSI stays green. That means that there's still a lot of funds coming to buy at this moment right now. Hence, you can see the long tail. But once the KSI turns red, that means the boys have decided to sell. The selling can bring it all the way down to 36.30. Nasdaq, let's take a look. Nasdaq is also a single yellow and it's an engulfed red bar now. Anything you can take a look at this, you can see right now the huge support resistance at 10,969, and that is pivot 1. If the market cannot stay up and goes below 10,749, it could be a free fall all the way to 10,453. And I remind you guys that if China continue to have problem, I'm pretty sure Apple, the kingpin stock, will not be able to deliver the package, and of course the earnings will be terrible. The earnings will be terrible. And Tesla, if they have two big giga factories, and one in this Germany and one's in this China, and if China's side is not able to produce, the lackage of this supply, resources, manpower, you can imagine what will happen next, okay? No kidding. Hang Seng, let's take a look now. Hang Seng. Hang Seng today has tried to recover. It's a yellow bar at the moment, but it's not completed yet. The market is fully resisted at this point here, and that is that 19,749. Now, the MLP is a big one, but watch out for today. As long as Hang Seng can still stay above 19,408, the market is still okay. Because why? The boys are still buying. The weightage is still there. That's why you see Hang Seng is alright. Even though it comes off, the market is still supporting it. But once it loses this MLP, careful. And if not, the next support will only be at 19,065, which is the MA 30 level. DAX is going to open soon, but you can see what happened to DAX yesterday. It did also a BNB, and most likely the market, if we continue to break down, we can even see 13465, which is the MA 200 level. And in terms of the Nikkei, you can see right now, I told you guys about Nikkei. The last 2 days, the Nikkei was trying to recover despite what Koruda say, but last night the market came off and now is holding at MLP level very closely. If the market breaks this point here, which is the BNB support level at this 25,680, 25,968, okay? Once it breaks this level here, the selling can be down all the way to 25,305 because the boys are actually more to the sell side for now, okay? And of course, we can actually look at the gold market at the moment. Okay, before that, we look at the crude oil. I missed out, sorry, my bad. Okay, then bring out crude oil. Wait, where is it? Okay, bring out the crude oil right now. Crude oil, here we go. Alright, for crude oil, yesterday it went up to $79.80, missed the $80 mark just by 20 cents, and then it pulls back down, but you can see it's strongly supported by the BNB SL level. The SL level is at $76.84. So imagine if crude oil started to go up on its own, and it's not because the dollar motivating it, that means that it could be a stronger demand for it, or is something that might happen, which is going to be bad, because we have seen that there's some geopolitical issue around certain areas, which are not that nice to say online right now, but you should know what's happening. Hence, therefore, be very careful. If crude oil price goes up and equity price comes down, that means that somehow someone knows that the dollar is in trouble, or because something big is going to happen. So watch out for the crude oil, okay? And let's go back to the gold market right now. So gold yesterday pulls back. Now let's look at the dollar first to understand this a bit better. Now the dollar yesterday did not really go up much, okay? It is up positive, BNB too, but it's nothing that large enough to create a gold pullback. So again, it seems like when equity market coming down, right, people will also sell gold because they're also afraid that one may lead to the other, okay? So yesterday gold pulls back below the BNB RL level, which is mentioned to you is at 1810. So now it's trying to firm itself at 1793, the pivot 1 level. Failing it and go below the MA, which is 1786, we can see going all the way down to the BNB support level, and that's 1764. That's $30 from where we are now. The KSI is red, and the KCX is blank. So it's a bit of a mix between both of them. All right. So my view is, as long gold cannot break above the RL level, gold will pull back down to the support level as usually, because we always seen that most of the time it does bounce around whenever the market cannot break the RL. And of course, look at silver. Silver has tried to go up to about $24.10, but heavily resisted by the market, and now it's still holding at the BNB RL level at somewhere around $23.50. All right. So as long as it stays above it, fine. But if it pulls back, the first target will be $22.93. KSI, KCX, both of them are positive. So that's why silver is actually a better bet in terms of risk reward. Okay, that we're talking about if a good risk itself, the reward may not be good, right? So for me, this particular silver, very safe. Right, unless the whole market collapse, then of course silver will also be sacrificed along the way. But long term, I see silver really going up to at least $28 to $30. Okay. Now, of course, some people have been asking me, can you cover a bit of this currency? I'll just do that for today, only for today. Yeah. Okay. Let's look at currency. You can see this is euro. Let's take a look right now. Euro basically is pretty sideways, really got no much movement, so I'm gonna leave it there. And of course, you can also take a look at dollar yen. The dollar yen itself, right, is also really sideways, not much movement, but undeniable is staying supported of the 130.57 support level. So as long as there's no much significant movement here, it should be sideways, and that really tells you that the market is preparing for something big, in my opinion. Swiss franc, as you can see, oops, sorry, my bad. Swiss franc, as you can see on our screen, has did a CCRY, BNB supported. So the first target should be 0.9416, okay, 0.9416. For the pound, we have been coming off, as you can see, some weakness is happening again, so that tells you that the entire world is not doing good, okay? So if pound fail to go above the MLP, it may come back down to 1.19 area once again. All right, so that is a few currency for you. Hopefully you like it, and we'll wrap it up with the this Bitcoin and Ethereum. Now you can see that we still do this DJDD, means it's a doji day, and it's still going to bounce around the BNB, which is like 17050 to about 16200 level. So the KSI and KCX is a bit mixed. One is calling for buy, one is more to the sell side. So likely the market will be sideways, which you can see evidently over here. So you do see that there's a merit for knowing the indicators well. And for Ethereum, the last one to go, also same thing. It has shared the same movement of Bitcoin and the same momentum over here. So as long as the market stays above 1213, the MLP, it should be fine. But if not, all right, it may go all the way down to 1182. That is the BNB SL level. Okay, guys. So I really hope that you like this session. It's a bit long, as longer than usual, but the content is incredible. Please think about this and trade carefully, and do spot the special code that I left in the PowerPoint slides. All right. I'll see you guys on Monday. Once again, this is Cal signing off. Have a great weekend and Merry Christmas to all my friends. Bye-bye.